Hello everyone, my name is Toshihiro Hirao. I'm one of the portfolio managers for the Asuka long short strategy here at Aizawa Asset Management. Please allow me to provide you with our brief comment and outlook on the Japanese equity market for the month of September 2022. In September, in the midst of a strong dollar and a weak yen, the global equity market continued to move back and forth between hope and concerns over the Fed's monetary policies. But worries over additional rate hike by the Fed based on a strong US CPI ultimately headlined, resulting in an overall bearish trend. After the Bank of England and ECB's rate hike, the FOMC followed with its own hike of 0.75% on the 21st of the month, and signaling the intention of continuing to hike until its terminal rate of 4.6%. This aggressive display of restraint against inflation resulted in a sharp rise in US interest rates and the expected economic slowdown resulting from this contributed to significant decline in the stock market. Meanwhile, Bank of Japan maintained its easing policy, causing the yen to weaken to 145 against the dollar, but its foreign exchange intervention strengthened the yen back up to around 141. While Europe is experiencing an economic deceleration and inflation, the election of the far-right group in Italy raised concerns of political uncertainty, adding to the current recession. The Japanese stock market was steady until about the middle of the month. However, a flight to quality was apparent after the announcement of US CPI and US FOMC, resulting in a decline of 5.49% in the Topix index and 6.26% for the Mothers index. As Fed Chairman Jerome Powell announced a strong commitment to fight inflation, an economic decline and poor earnings cannot be avoided for the foreseeable future. With that said, extra attention will be given to earnings reports that will begin mid-October. Due to this, while a majority of market participants are prepared for a decline, it is difficult to interpret how much of the ominous forecast is already factored in by the market. The expectation is a fall in the market due to a low out-of-week numbers of coupled by the October effect, reaching a bottom for the foreseeable future. However, while the Fed has strongly vowed to fight inflation, we also need to consider indications such as core inflation, PC deflator, expected inflation, and decline in oil and other commodities, which will influence future inflation. As for Japanese stocks, with BOJ's continued stance on monetary easing in addition to tourist expectations from the country's border reopening. The economic decline is not expected to be as bad as Europe or the US. And the market decline is expected to be relatively soft despite the risk of period. We anticipate an up and down market for the time being, and we aim to capitalize on short-term trades while maintaining an overall neutral portfolio. As always, thank you for listening to our monthly Aizawa Asset Management Market Update. We hope our video was helpful, and we look forward to updating you again next month.